me. Absolutely, the US looks good. We made a step change in margins, as you said, up almost 25% EBITDA growth quarter over quarter. It's really driven by a big investment we made in our Mitchell plant in Indiana, and we promised to the capital market to up our margins 400 to 500 basis points back in the Capital Market Day 21, and here we go. We are delivering.
Fabulous. Look, I've actually read through, God knows how I've had time, a lot of your four-page announcement today. And it seems to me, if I can summarise, US looks great. We've covered that as well. Great that there's progress being made on CCUS, on the circular economy as well. Weather's a bit of a problem. I didn't see a lot on activity in Europe. Are you blaming weather for problems in European activity, or is there something else going on, Dominik?
Look, I think Europe, let's not play it down, made still a very strong result. Okay, quarter over quarter, there are some movements, but we are still going strong in Europe, despite a sluggish market. Let's face reality, you know it in the UK, you see it in continental Europe, you know, volumes, especially in residentials, continue to be suppressed. However, we now in our important markets see some sort of stabilization coming, and that I think is good news. Where there is a downside, I mean, we are away from the peak in Europe, 20-30% in some markets. There is great upside in the future.
Wow, 20-30% in some markets. Dominik, you were so busy yesterday, I'm sure, preparing for this, so you didn't have a chance to watch Rachel Reeves, UK Chancellor of the Exchequer, but I did have a chance to watch you. I was flicking between the Olympics, show jumping and Rachel Reeves. Show jumping was better. But Rachel Reeves was also pretty good. But she cut the A27 bypass at Arundel, and then she cut the A303 underpass that was going to be at Stonehenge as well. I don't expect you to care too much about those two infrastructure projects, but I do expect you to care about the trend. Cash-strapped European and global governments on a fiscal basis, they're beginning to cut infrastructure. Does that worry you?
We don't see this across the board, to be honest. I think there are many large infrastructure projects still running. I think the same is true for the UK, HS2 and others. You know, there are big projects in the pipeline also in the UK. I understand they may need to retrench a little bit, but we remain positive also for infrastructure in the UK.
Yeah, Dominik, good morning to you. I mean, do you think Germany's housing market, which, you know, you actually once named as being in a confidence crisis, is that beginning to come back a little bit?
Absolutely. I think we see some sign of stabilization on low levels. Let's face it. I think, as I said, volumes down 20-30% from the peak in housing. But, you know, for us, it's important to see light at the end of the tunnel when it comes to that development. And that's surely in some key markets, also in Germany, in the last couple of months, we've seen some sign of stabilization. And from there, I think we'll slowly step back up.
All right, very interesting, because at the same time, you're seeing inflation beginning to moderate somewhat. That might impact your cost base as well. But at what level of rate cuts, which have started to come and could come even further, at what level of rate cuts would stimulate sort of the housing or materials market in your view?
Yeah, I think you mentioned my earlier remark around the confidence crisis. I think the first piece to solve that confidence crisis is to really see the turn in the interest rates. Let's wait and see what the Fed does later this month, and then going into the second half of the year. I think we've seen some rate cuts in parts of the European markets, and that should also indicate to consumers, hey guys, it's not going to go up from here, it's stabilizing or maybe even going down. That's an important sign, because the world also in the past has built on interest rates of 4 to 5%. This is nothing magic.